Mobile home parks. The most underrated real estate investment. Most Americans are dumping their money into the S&P 500 thinking it's their ticket to wealth. But while they're getting 5 to 7% returns, some investors are quietly making 20 to 30% annually on mobile home parks. And the crazy part? Nobody's talking about it. Hey, I'm going to show you why mobile home parks are the most underrated real estate investment in America right now. This isn't about flipping houses or becoming a landlord with nightmare tenants. This is about passive income that's more stable than you think and way more profitable than what you're probably doing with your retirement accounts. We're talking about parks in Texas, Florida, Ohio, and everywhere in between. And by the end of this video, you'll know exactly why institutional investors like Berkshire Hathaway are buying them up like crazy. So what are we actually talking about here? A mobile home park is simple. You own the land. Residents own their homes and pay you lot rent every month. That's it. No property management nightmare like traditional rentals. No dealing with expensive repairs on the house structure because you don't own it. Let me break down real numbers. A mobile home park in rural Texas might have 30 lots. Average lot rent in that market? $400 to $600 a month. Do the math. That's $12,000 to $18,000 a month in gross revenue from just 30 lots. A lot of parks are running 50, 75, even over 100 lots. Here's what separates this from traditional rentals. When someone rents an apartment from you, they can leave tomorrow. With mobile home parks, residents own their homes. Leaving costs them $10,000 to $20,000 to relocate their actual house. That creates sticky tenants. We're talking 80 to 90% occupancy rates as a baseline. Your expenses? Utilities, maintenance, maybe management fees, property taxes. In most markets, you're looking at 30 to 40% of gross revenue going to expenses. That leaves you with 60 to 70% net income. Compare that to traditional rentals running maybe 40% net after all the headaches. And here's what really matters. Mobile home parks are recession resistant. People don't stop paying lot rent because the economy dips. If anything, mobile home living becomes more attractive when times get tight. The reason mobile home parks fly under the radar is simple. Complexity. You can't buy a mobile home park with a standard mortgage from your local bank. You need portfolio lenders, commercial lenders, or cash. You need to understand zoning, lot rent potential, tenant quality, and market dynamics. It's not as straightforward as buying an index fund through Fidelity and forgetting about it. But here's the reality. That complexity is your advantage. Warren Buffett and Berkshire Hathaway own Clayton Homes, one of the largest mobile home companies in America. They're not stupid. They saw what most people miss. Mobile home parks are inflation-proof income machines that run on autopilot once they're stabilized. The other reason? Bad optics. People have outdated stereotypes about mobile home parks. That's changing fast, especially with the affordable housing crisis exploding across America. Cities are rezoning. Investors are upgrading older parks. It's becoming professional. In 2024, if you can find a park with 20 to 40 lots in an emerging market, you're looking at returns that completely destroy what you'd get putting $100,000 into your 401k or Roth IRA. You don't need millions to get into this. You need strategy. First, educate yourself. Join mobile home park investor groups. Read case studies. Understand your local markets. This takes maybe 30 days of focused research. Second, start networking with commercial real estate brokers who specialize in mobile home parks. They're not everywhere, but they exist. Tell them you're serious and what numbers you're targeting. Third, when you find a deal, analyze it properly. Look at occupancy rates, rent rolls, tenant quality, deferred maintenance, and expansion potential. A park that looks distressed might just be undermanaged. That's where you make money. You're looking for parks with 50 to 125 lots, ideally already operating. Prices range from $500,000 to $3 million depending on the market. You'll probably need 20 to 30% down, which is between $100,000 and $900,000. That's not impossible for someone with real savings. And the cash flow immediately starts paying you back. Your returns typically come from two sources: immediate cash flow from lot rent, and appreciation as you improve operations and potentially add more lots. Mobile home parks are where real estate investing happens outside the mainstream narrative. If you're serious about building actual wealth instead of chasing stock market returns that barely keep up with inflation, this deserves your attention. Hit subscribe. Watch our next video on how to analyze mobile home park deals. And drop a comment below. What's holding you back from exploring real estate investing? Let's go.